Hey YouTube, this is Scott with Scott Talks Investing. In this video, I will cover the basic knowledge and tools that you will need to begin investing in the stock market. First and foremost, it's important to have a basic understanding of how the stock market works. The stock market is a platform where publicly traded companies can raise capital by issuing shares of stock to investors. When you invest in a company's stock, you are essentially buying a small piece of ownership in that company. As the company grows and becomes more valuable, so does your investment. However, one thing to note is it's important to remember that investing in the stock market does come with risk. The value of a company's stock can go up or down depending on a variety of factors, such as economic conditions and company performance. It's important to do your own research and understand the risks involved before making any investment decisions. And just a quick disclaimer, I'm not an investment advisor, so please use this for educational purposes only. Let's talk about some of the tools you'll need to begin investing. The first tool you'll need is a brokerage account. A brokerage account is a type of account that allows you to buy and sell stocks, bonds, and other securities. There are many different brokerage firms to choose from, such as TD Ameritrade, E-Trade, and Robinhood, as well as many others. Many of these firms offer online and mobile trading platforms, making it easy to buy and sell stocks from anywhere. Another important tool is a stock research and analysis tool. There are many free and paid tools available online that can help you research and analyze stocks. Some popular free tools include Yahoo Finance and Google Finance. These tools can provide you with financial data, news on the companies, as well as stock charts and other technical analysis tools. It's very important to set a budget for your investments. Before you start buying stocks, it's important to determine how much money you can afford to invest. One thing to keep in mind when investing is your time horizon. And what I mean by that is, how long do you plan to have this money invested? I would not recommend investing your next month's rent to try to make a quick buck, as you'll likely find yourself in the negative. There is obviously that potential to make a lot of money day trading, selling options, buying options, and doing some of these more intricate investing strategies. However, if you're watching this video and you have not yet invested in the stock market, I would turn off all of those stock guru pickers on Instagram, TikTok, and of sorts, and start to learn the basics of what investing is before you jump into that type of investing. My recommendation is to start small and gradually increase your investments over time as you gain more knowledge and experience. One thing to always keep in mind is the stock market's constantly going to go up and down. So say you buy your first stock today and tomorrow that stock does go down. It's important to remember that the stock's not always going to go up. There's going to be red days and green days. Red days are the days in which the stock goes down. Green days, obviously, is when the stock goes up. Again, going back to that time horizon, how long do we plan to hold this stock? Another thing to keep in mind when you're looking to invest in the stock market is diversifying your investments. Diversifying means spreading your investments across different types of stocks and sectors. Rather than putting all of your money into one company or sector, this can help reduce your risk, as the performance of one stock or sector may not affect your overall portfolio as much. A sector, as an example for a sector, would be oil and gas versus technology. So oil and gas would be a sector, technology would be a sector, healthcare would be a sector. So if you invest in Apple as a company, you invest in BP Oil, and you invest in Johnson & Johnson, you would have 3 different companies in 3 different sectors, therefore diversifying your investments. It's important to note that the performance of any given stock can be affected by a variety of factors, and past performance is not necessarily indicative of future results. It's always recommended to do your own research before making any investment decisions. And as I mentioned earlier, it's important to have patience and a long-term perspective when investing in the stock market. The stock market can be volatile in the short term, but over time it has historically produced returns for investors. It's important not to get caught up in the short-term market fluctuations and to stay focused on your long-term investment goals. Think years, not days, weeks, or even the current year. If it's a down year, think of this as a great opportunity to buy. As we can see in this historical chart, the down years last significantly less than the up years. Down years in the stock market are referred to as a bear market, meaning the stock market as a whole is on a downward trajectory. And in the up years, those markets are referred to as a bull market. Stocks, bonds, and other securities provide you an awesome opportunity to let your money work for you and to help you set up your financial future. I highly encourage you to dig in and do some more research on your own. Investing in the stock market can be a great way to build wealth over time, but it's important to have an understanding of how the market works and to use the right tools and strategies. By setting a budget, diversifying your investments, and having a long-term perspective, you can help increase your chances of success in the stock market. As always, thanks for watching and happy investing. This is Scott with Scott Talks Investing.